So let's go back to our trade tab. We're going to do 4 of the August 30s. Bump that up to 4 August 30s. And we're going to sell 1 of the July 25s. 1 of the July 25s. We got 267 and 62. 267 and 62. If we go ahead and put this order in, we have a total cost of $254 on the trade, including the commissions of $6. So let's go ahead and put that in. And we got filled right away. That's the thing I like about these kind of trades is we get filled right away. Of course, we are paying the market prices, but they're so favorable to us that we really don't have to worry too much. And there we are. Our maximum loss is going to be about $70, but since we're actually going to be probably closing it out before expiration, we just want to hold this through to earnings, and that's all we're really doing. We want to see the stock pop up. And if it goes up a few bucks, we're going to make some money, and that's all we're really looking to do. We're looking to make money on that news item, which is going to be the earnings announcements coming out on the 16th of July. So you can put these on just about any kind of stock that you want. I think they're very favorable, especially if you're somewhat bullish or bearish. Actually, it doesn't matter, actually. And if you wanted to, you could also play with a scenario in which you do just the opposite. You sell. You would buy an August put. Let's say you wanted to buy a couple of those. And you wanted to sell an in-the-money July put. I got to do it the other way. I want to make sure that I'm buying first, and I'm selling my put second. Now let's go ahead and analyze this. That's not a bad scenario either. Now you got a little more downside risk if it doesn't move, but now you've got unlimited potential on the downside and unlimited potential on the upside. So if you're looking for a truly huge move in eBay, you could do that. If we're doing the August 25 puts, we could go at August 22s. That's a little bit more risky. The 25s are a better choice. Go to 27.50. Oops. And we're risking $237 if it doesn't move. On the 25s, we're risking $150. It's a very favorable scenario either way, but you know what? I think what we got is pretty cool. I'm looking for an upside pop on eBay, so I'm just going to keep it at that. Limit my commissions. I still have very nice protection on the downside, so I think I'm good. But you can do it with puts as well, just to show you that it can be done either with calls or with puts. Like I said, I did it on. Let's see, it was the XLF that I did with puts that also worked out very, very favorably here. I hit, it can go down. It doesn't cost me very much money. If it goes up, I make money. If it goes down, I make money. Very, very favorable kinds of trades that you can put on. And you can put these on all day long. They're very inexpensive. Here's the Verizon trade. Very inexpensive to put these on. And you have a lot of upside and downside protection either way, but it's a very, very favorable way to trade. You're not going to find this kind of information anywhere else. Really, this is very, very insider stuff. I hate to say that, but it really is true, because you could read all kinds of books and they're never going to demonstrate exactly how to make these kind of trades in these kinds of favorable conditions. And the only caveat is to use these on stocks that you think are really going to move. In other words, you don't want this thing just to sit there so that you lose, $40. $40 is not a lot, but still, if the price does not move at this point, I'm going to lose $42. And I don't like losing money at all. Believe me, I'm extremely risk adverse. I don't like losing money. So I want a stock that's really going to move. If I think I hear something in the news, or I know that earnings are going to be coming out relatively soon, for a company that I think that has the potential to move dramatically, well, then I am actually going to put that trade on because it's very low risk, very little money up front, but it has all kinds of upside and downside potential as you set it up. If you set it up with calls, you have unlimited upside potential. If you set it up with puts, you have unlimited profit potential on the downside if the stock trades down. Take a look through. There's many ways to find stocks in the news. You can use the Thinkorswim platform for the earning alerts. You can go online and look for earning alerts. You can look through, watch CNBC. Pay attention to the stocks that they're talking about that are potential takeover targets. They don't usually happen right away. You got to give them a few months, or maybe even maybe sometimes even happen in a few weeks. But generally, the stocks that everybody's talking about that are potential takeover targets are perfect for this kind of strategy. We only used, as I mentioned, we only used a few contracts for these. We have very little money into these types of trades. Margin requirements are very minimal. If you want to trade more contracts, you do increase your risk. So just keep that in mind. Hey guys, trade with confidence. As I mentioned, please send me any questions you have about this particular trade. This is a super dynamic way to trade up or down markets. You can make unlimited money, and you can just set these and forget these. Just make sure you have a calendar by your desk or some other way to track the timing of these events. In other words, if you're playing the earnings on eBay and you expect them on July 16th when they come out, you want to be able to put that on your calendar to keep an eye on this trade for July 16th after the market close and the next day. So that's it for today, guys. Hey, trade with confidence.